Assalamualaikum warahmatullahi wabarakatuh. Good morning, greeting to all of us. Shalom, Om Swastiastu, Namo Buddhaya, greeting of virtue. Let me introduce myself. My name is Yosua Antono Pratama as a presenter and moderator. On this occasion, Group 3 received the theme of two-sector economy. But before starting the presentation, allow me to name the members of the group of 3. The first is Bening Neng Laila Tulki, with name is 21 08 06 94 044. Fitra Ayuningsi with name 21 08 06 94 059. Liliana Widianti with name 21 08 06 94 002. Nirena Arifani with name 21 08 06 94 055. Salmatu Koero Adina Arif with name 21 08 06 94 070. And the last one is myself, namely Yosua Ananto Pratama with name 21 08 06 94 003. For the first discussion, it was presented by me. A two-sector economy is an economy that is assumed to consist of the household sector, or RT, and the corporate sector, or P, also called a closed simple economy. There is an attachment between one another because without a household, a corporate sector cannot produce a good. After all, it does not have inputs or a production sector. Vice versa, without a production household sector will find out difficult to obtain goods and services because corporate sector are unable to produce themselves. The reason why it is called a simple closed economy is that there is no government of one's community, which will create a more complex relationship. There are several characteristics of the two-sector economy. First, at low incomes, households dig for saving, or we can call it de-saving. An increase in income increases consumption spending. At high income, households save. In the first point, consumption households will save less often because almost all of their income is used to meet their own needs. In the second point, as household income increases, consumption will also increase. And the last point is that even though income increase will increase consumption, it will eventually stop at some point, and the remaining money it will be used for saving in the bank.
Assalamualaikum warahmatullahi wabarakatuh. So I want to learn about slide 5 until slide 9. Okay, the figures show the flow of a simple economic cycle that is explained as follows. First, household as owner of factor of production on income in the form of wage, rent, interest, and profit. Part of the income earned by the owner of production factor household is used for consumption. The third part of the income which is not used for consumption is used as saving. Therefore, companies borrow funds from household for investment. Two important points from the full above are the economic output is determined by consumption and investment. According to Keynes, consumption is influenced by disposable income, while investment is an exogenous variable. Suppose a household has the following income and expenditure structure. When not working, income is 0, consumption is equal is 750,000, so the profit is minus 750,000. When the income is 500,000, consumption is 1 million, then the saving is minus 500,000. When income is 1 million, the consumption is 1,250,000. The savings are minus 250,000. When the income is 1,500,000, 500,000, the consumption is 1,500,000. The savings are 0 and so on. See table 4.1. The thing that needs to be observed is that when income is 0, the household has consumption which is taken from savings, so that saving of minus 720,000. Based on the table above, it is known that when income is 1,500,000, consumption is 1,500,000, meaning that all income is used for consumption. In other words, no income is used saving. If made in graph of relationship between consumption and disposable income, then the graph is obtained as follows. Consumption function is the relationship between the amount of goods consumed and disposable income. The relationship is positive linear. From the picture, it can be concluded that if YD equals C plus S, meaning that disposable income is used for consumption and also for saving. Second, for disposable income of 0, then consumption is 750,000. This means that there are consumption that is not directly linked to revenue called constant exogenous revenue, or symbolized by C with bar. The slope of line C depends how much income is used for consumption. Based on the calculation above, the slope of line C is 0.5, meaning that 50% of disposable income is used for consumption, while the remaining 50% is used for saving. Therefore, at a certain income, households are willing to save. In the graph above, after income 1,500,000, part of the income is used as saving. In a two-sector economy, personal income or YD is the same as output Y because there is no government spending. The consumption function can be made in a mathematical formulation: C plus C with bar plus C YD, where is C the level of consumption, C consumption when disposable income is equal to 0, C is slope of consumption or marginal propensity to consume or MPC, YD is income TD. Tendency to consume and saving. Therefore, the tendency to consume goods can be explained by two concepts. This is marginal propensity to consume or MPC and average propensity to consume or APC. MPC by formula is delta C divided by delta YD and APC is C divided by YD.
The following are some important things related to the theory of propensity to consume. 1. Value propensity to consume additional or marginal propensity to consume MPC from 0 to 1, mathematically formulated as follows. C is C plus CYD, where C is consumption. The bar means that the variable is exogenous. YD is disposable income, and C is the marginal propensity to consume MPC. MPC can be the same as long as disposable income change, and can also be different. It depends on each individual. 2. The ratio of consumption and income, average propensity to consume, or APC, decrease in income increases. This means that saving is a luxury item where the rich can save more than the poor. APC is C or Y. APC is C or Y plus C. The formulation means that increase in income will reduce the average consumption tendency. MPC graphically can be described as follows. Look at this graph. C or rupiah, YD is disposable income. Households allocate their disposable income for consumption and saving. The higher the disposable income, the higher the income allocated to consumption, but on average it will decrease. The following MPC can remain as long disposable income and can also change. Value that still causes the slope to be linear. While different values cause the slope is uneven. This difference depends on each individual, on a child, household, or state, on a country's sale. Tendency to saving. The concept of the saving rate is divided into two streams, namely 1. Marginal propensity to save, or MPS, and 2. Average propensity to save, or APS. One determinant of the marginal slope is disposable income is the main determinant of MPS, and MPS values tend to vary between income groups. In addition, other factors in the MPS are wealth, interest rates, and employment situation. The marginal propensity to save, or MPS, or marginal propensity to save, is the ratio between the increase in saving, delta S, and the increase in disposable income, delta YD. Since individuals allocated additional income only to consumption or savings, the value of MPS will be between 0 and 1. MPS is 0 when additional income is consumed and 1 when all additional income is saved. Can be calculated using the formula MPS delta S divided YD. Next, average propensity to save, or APS. The average propensity to consume, or in short, is always expressed as APC, or different from the English term average propensity to consume. Is the ratio between the level of consumption, or C, and the level of disposable income when the consumption is carried out, YD. This consumption tendency is also the portion of disposable income spent by household to buy goods or services. It can be calculated using the formula APS is S divided by YD.
The relationship between consuming tendency and saving, judging from the MPC plus MPS1 equation, MPC is a change in consumption as a result of income change, while the MPS is the desire to save someone. So, the relationship between MPC and the MPS is a unity of the function between consumption and all factors that cause the amount consumption. The tendency consumed, the average versus the saving tendency is the average. In economics, households are assumed to have two options related to disposable revenue, spend or save. Therefore, APC added with APS is equal to 1. So we're going to talk about consumption and saving function. First of all, consumption can be interpreted as an activity of domestic goods and domestic service. The goal is to meet daily needs of the income obtained. Consumption function and is a curve that describes the nature of the relationship between the level of household consumption in the economy and national income. Consumption function have a formula C equal A plus BY. A as a household consumption when national income is 0. B is a marginal propensity to consume, or we know MPC. C is a consumption rate. Y is a national income. Next, we're moving to the saving function. While savings are not much different from consumption, which also comes from income, the difference from the two is that if consumption is income issued, while saving are the income stored. Saving function, a curve that describes the nature of the relationship between the level of household saving in the economy and national income. Saving function have a formula S equal minus A plus 1 minus B Y. A as a household consumption when national income is 0. B is a marginal consumption tendency, or we call MPS. S is a savings rate. Y is a national income.
Okay, we move to investment. Investment is the company expenditures to purchase capital goods and production equipment to increase the ability to produce goods and services in the economy. Investment has a function, namely a curve that describes the relationship between the level of investment and the level of national income. Investment also has a form of function. Number 1, the shape is parallel to the flat axis, or autonomous investment is that capital formation is not affected by national income. Number 2, the shape curve rising to the top right is investment affects national income. So here is an example of the curve of autonomous investment, and this is the example of a curve for investment that affects national income. Determinants of investment level. Number 1, profit and interest rate. Number 2, forecast about the future state of the economy. Number 3, technology advance. Number 4, national income level and change. Number 5, profit earned. The balance of the country's economy. So there are 3 ways to find out the economic balance of a country. Namely, number 1, using the examples of national income and aggregate spending figures. Number 2, using graphics. Number 3, using mathematical proof method.
In a simple economy, aggregate demand can be divided into 2. Aggregate demand is the value of all demand for all types of goods and services made in a certain period. First, consumption expenditure. Consumption represents household spending on goods and services. The main determinant of this component is disposable income, sometimes also called after-tax income or disposable income. Second, expenditure of capital goods or investment. Investment spending is the purchase of goods and services by business. Purchases are usually for physical capital, which is very important for their production capacity. An economy is said to be in balance if the total expenditure is equal to the income. The formula is aggregate expenditure equals C plus I, Y equals C plus S. Balance if expense equals income. Aggregate expenditure equals Y. C plus I equals C plus S, so I equals S.
The state economic balance in numbers. So here's the economic balance in numbers. By referring to the previous method, we can see that there is an economic balance in national income. C plus S equal 720 plus 120 equal 840, and in aggregate output C plus I equal 720 plus 120 equal 840. So there is the example, the balance of the country's economy using graphics.
The picture beside is the graphic illustration. Example, in 2008, the income level was 1,000, and in 2009, the income level was 1,500. In 2008, the saving rate was 300, and in 2009, the saving rate was 500. Find the saving function. Answer: S equals minus A plus 1 min B multiplied Y. 1 min B equals MPS equals S divided to delta Y. MPS equals 200
divided to 500 equals 0.4y. X equals minus a plus 0.4y. 300 equals minus a plus 0.4 multiplied 1000. 300 equals minus a plus 400. 300 minus 400 equals minus a. Minus 100 equals minus a. So, the saving function is x equals minus 100 plus 0.4y.